All right, everybody. It is Sunday, May 5th, 2019. This is my newest segment of Markets, a Look Ahead. I'm going to start you off with this because, again, no one's talking about it, and I want to show this to you so you can see this for yourself and understand that Greggy over here is not making this up. The bond market. As of today, right now, this morning, you can see the 6-month Treasury bill is dominating most of the yield curve. The 6-month, look at the yield on that. Now, let's go to the 1 year. Okay, 6-month yielding more than the 1 year, the 2 year, the 3 year, the 5 year, and even the 7 year. It's unbelievable. It is unbelievable. But you're not supposed to know that. No. You are not supposed to know that most of the yield curve is inverted. Now, why would I be showing you that? Look, when you are trying to discern where this twisted, sick, absolutely fake stock market is going to go, you got to look there first. Okay, once you get that out of the way, once you say, okay, what's the bond market telling us? Okay, rates are so suppressed that most of the yield curve is inverted. All right. Now let's talk about the rhetoric. Very, very simple. You got a Federal Reserve who has been screaming from rooftops that there's no inflation. Then comes along President Trump. Guess what? The Fed is right. There's no inflation. So there's part of the alliance, which I spoke about on Friday. And then you got Mike Pence, who comes in through the back door. He's also now part of this trinity. And it's an unholy alliance, I'm telling you. Mike Pence took the cake on Friday. Again, I used to have some respect for this guy, but now he says, and this is a quote, there is no inflation at all in the economy. He doesn't want to talk about how things are shrinking. He doesn't want to talk about how the stock market is inflated beyond belief. He doesn't want to talk about how the housing market is inflated beyond belief. We have inverse bubbles all over the place. I mean, this is an environment that in many ways is unique. We've never experienced distortions like this before. Unbelievable. But again, this unholy trinity, the Federal Reserve, President Trump, and Vice President Pence are pushing the narrative of no inflation. Now, let me just go on a little further here about no inflation. We all understand the concept of money velocity, okay? We are near historic lows. Now, what we understand, and this is no speculation, what have central banks been doing around the world? Printing epic sums of cash out of thin air and adding even more epic sums of cash to a digital screen. And yet, we're not seeing an overwhelming amount of inflation. Yeah, sure, we are seeing inflation despite what the unholy trinity is trying to tell us. But again, the reason why we're not seeing hyperinflation yet, mark my words here, is because of the money velocity. Cash isn't moving. There's no cash moving through our economy. That means we're in no recovery at all. There cannot be an economic boom. Okay, so there's the epic lie from the very top here in the United States. I hate lies. You know that. I will expose them at every corner that I can. Every chance I get, I will do it. So, understanding that the cash is not moving, all of these digital bills that exist, the printed ones that exist, do yourself a favor. Go to the Federal Reserve's own website. Your mind will be blown. On the planet Earth, there exists only $1.7 trillion in actual printed bills. The rest of it is digital. It doesn't exist. It's not on the elemental chart. Yeah, that's unbelievable to think about it, right? In the quadrillions, if you add in dollar derivatives, it's all just not there. It does not exist. There only exists $1.7 trillion printed on Earth. Okay, so think about it. Anyway, getting a little sidetracked here. So The money velocity is at historic lows because we have no recovery. Your cash has to move for there to be a recovery or a boom. You understand? Okay. At one particular time, we are going to get a massive, uncontrolled sell-off in the bond market. Again, you saw the yield curve. It's inverted. 6 month is dominating it at this point. So, no individual in their right mind, no institution in their right mind would want to hold a debt instrument here. There's going to be a moment where this all shakes off, where we get a massive sell-off because of the way the yield curve is being situated, the way it's developing right now. And when that happens, a lot of cash is going to start to move in a big way. The money velocity is going to pick up, but not because it's moving through our economy, because there's going to be a massive, uncontrolled sell-off in the debt market. Yields are going to spike. That will put pressure on stocks. Stocks will sell off. A massive movement of cash is going to occur, and an incredible amount of inflation is going to hit us all. And then Mike Pence, the backdoor man, President Trump and the Fed are going to go, oh boy, what are we going to do? Now, how are they going to attempt to stop the bleeding? They're going to try to raise rates extremely rapidly. They're not going to be able to keep up with the sell-off in the bond market. Believe me, it's the debt market itself that's going to set fair value for debt. That's the only job of these markets. And the debt market is too big for any central bank to try to control. Even if every single world central bank would try to synchronize this, they don't have enough firepower. I know central banks are very strong, but there is too much cash out there just floating around, waiting to chase the same amount of goods. Again, you do not have to be a rocket scientist or even have one functioning brain cell to understand how this will work. It's unbelievable. But again, everything is great. You know that. And of course, there's no inflation anywhere. Here's the story. The narrative is, again, there's no inflation anywhere. We're getting calls for rate cuts. Again, from the backdoor man. Mike Pence is now the backdoor man. Let's call Mike Pence the backdoor man. That's who he is. He's earned that title at this point. So between the unholy trinity here and the president himself calling for more quantitative easing, looking at the debt market, because that's where we started off, okay? Where do you think cash is going to go this coming week? You think it's going to come out of the stock market, or you think it's going to go into the stock market? I'm going to sound like a permeable again. For weeks upon weeks, I have explained to you that cash is going to make its way into the stock market, and for weeks upon weeks, this guy sitting here has been 100% correct. And that's exactly what we're going to see this week, unless some kind of a black swan comes out of left field, which I doubt. We're going to hear more nonsense about how great the China deal is going. The president floated this out yesterday. Again, for the gazillionth time, it's laughable. It really is. I mean, we almost have to laugh. We understand that there are more and more concessions being made by the Trump administration to get this deal. Look, with all the talk of how tremendous this is, how fabulous this is, how it's going so well, if a deal isn't pulled off, well, I'll leave the rest up to you here. Look, we all know how this is going to play out anyway. Both sides are going to claim victory. That's what they're trying to. A deal has already been made in one form or the other. We already know that. What they're trying to do here is figure out how they can spin it so the Chinese people feel like they won and the American people can feel like they won as well. Understand, a lot of this is look here, don't look here. You're not supposed to know what's going on in the bond market. You're not supposed to know that. You're supposed to be focusing on the stock market going higher. You're supposed to buy the I don't even know how to put this. The scores of lies that we keep hearing, fake data that we cannot believe. How they twist these numbers is beyond me. Actually, it's not beyond me. I outline this for you all the time exactly how they do it and why they are doing it. And the people sit outside my window are distracted. They're like this. That's what they're doing. Anyway. All right, look, I know it's Sunday, so I'm going to not go off anymore here. I'll let you all go. Enjoy your day. But put these concepts into perspective, and let's see how this plays out, because this guy believes more cash is going to enter the stock market this week. I am waiting for a trend to develop. Again, on Friday, we had a nice rally in this stock market. One day does not a trend make. All right. You all know that I trade equity derivatives. I am not a day trader. I can't day trade. I've admitted this. I don't see a point in it. I want to capture longer trends. I think there's more money to be made in a safer way. So tomorrow, let me tell you this before I let you go. In an ideal world, what I would like to see tomorrow is the market give back a little of what it put on Friday. I'm not saying this is going to happen. This is what I would like to see. But again, we don't trade the market that we're dreaming about, that we're foaming at the mouth over, speculating about for the most part. We're trading the market that we have. Okay? So we're going to reevaluate this tomorrow. So again, what I would like to see, a market pullback tomorrow, that would be a nice entry point for me and my lions out here, for which I will post my positions in real time like I always do. And we're going to capitalize this. We're going to shred this to death. To death. Just as we have been doing since the beginning of the year. I have had a stellar year. One of the best years so far in a while trading this market. And I'm very happy to say that. And for my lions too. We're doing well. With that said, I am going to let you go. Have a great Sunday. I will see you tomorrow morning.